than just business news, we're news for business people.
Welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a quiet start to the last week of 2017. The Nifty trades in a 40-point range, but off the day's high. Shares of Reliance Communications surge close to 15%. The company is due to make an announcement at 2:30 p.m. today. Steel stocks are gaining in trade after companies affect another hike in prices this month. Gas Authority of India also trading higher after IOC and BPCL express interest to take over government stake in the company. The gas utility wants to merge with ONGC though.
And that's not all. I think we've got some splendid strength at the broader end of the spectrum. But let's first start off talking about the large caps, and don't get deceived by these red and the green dashes in between, because it's been an absolutely flat day of trade. It's almost as if the trade didn't happen today. 10,492. It just shows you that there's virtually nothing that the markets have done in today's session. And the market breadth, though, are positive. I think if you get in the advanced decline ratio, you will see what I was saying, that the broader markets have done reasonably okay. 3:2 in favor of the declines. You would take this almost any given day. And while the volumes may be you would presume a bit more tepid, I think they'll pick up closer to expiry as well. I know this is the last week of the year, but because it's expiry week, we may have some bit of activity pick up, some bit of volatility pick up as well. In today's session, for now, the volumes are just about at par. Quickly get the heat map. I would presume it will still even Stevens. When we started off, it was almost 50-50 in favor of the advances and the declines, and pretty much even Stevens right now as well. No great losers, some losses to an HDFC Bank or otherwise, and some gains to a Yes Bank and a Bharti. But there's no pattern to this madness, method to this moves, but for the fact that metal stocks are up and about because of the price hikes that have come in. So all the long prices have been raised, and which is why companies operating in those pockets, the likes of SAIL, some bit of Tata Steel as well, JSPL and some of the others have had some benefits, but otherwise no new specific moves, at least in the large cap space in a meaningful way. But the mid cap space is a different kettle of fish, the likes of Arcom and a few others. But Pradeep is here to talk about that, and fair bit of activity at the broader end, Pradeep.
Definitely. If you look at a lot of news flow is also helping, orders coming in, deals being considered. So you have Cummins and Kirloskar Oil moving up. On that news, the company has been asked to provide more details through the exchanges. We haven't heard that, but both these stocks have done well in today's trade. Look at JP Associates. There are talks of restructuring being finalized by the creditors by the end of this week. So that's also positive. Auto ancillaries are doing well. Both Jamna Auto and JNXL, these are two stocks that we have been tracking since morning, and both of them have held ground. Godavari Power continues to move up. The smaller alloy and steel companies have been doing well. Today we also got a news that most of the hot roll product companies have been able to increase the long prices. That's again a positive for this entire sector. So Steel Authority has moved up, and all the mid caps have also moved up in this sector. 63 Moons, Kridhan Infra are a few stocks that remain strong. These stocks have been moving up last week as well, and Dolphin Offshore is another key stocks to talk about today. On the back of an ONGC order coming its way, Dolphin is up by around 8% at this point of time.
Well, it's turning out to be a muted start to the expiry week and also the last week of 2017. But nothing to worry, we're still trading around those all-time high levels. In fact, in the opening session today, Nifty touched its fresh highs and Sensex too touched the mark of 34,000. What are the trends in the futures and options suggesting then? The volatility index today opened with gains of nearly 4 to 5%. So the volatility in the last week of expiry is on the higher side. But we started this series when India VIX was around 13. So on series, if you compare this level to the where we started the series, it's still lower by almost 1 point or so. The premiums today have fallen, in fact, both on the call as well as put side, as the time value of money near zero in the expiry week. So watch out for that. What kind of range can one expect in the near term? Look at the 10,500 call as well as put strike. Both these strikes have seen significant amount of writing. The 10,000 put so far has added close to 12 lakh shares, and the 10,000 call strike has added nearly 7 lakh shares. The premium on both sides is between 35 to 40 rupees. That's telling you that the near-term range for this market could be anywhere between 10,440 to about 10,540 on the upside. What is the range for Bank Nifty then? Well, if you look at this series, Nifty's outperformed Bank Nifty, but do watch out 25,500 level on the downside. That's the first support level for Bank Nifty. That's where the maximum open interest concentration is so far. In terms of stock futures, that's the Nifty Bank rollover, which is just hovering at around 23% right now. But the Nifty rollovers so far have been on the higher side. That's about 35% currently. Pull up Jet Airways. That's the counter which came out of the F&O ban, and it's gaining traction. In fact, the volumes on the cash side have been pretty high. The futures are once again seeing fresh long positions. The stock is trading above the mark of 800. It has also touched its fresh 52-week high. That's the December futures, where open interest has surged nearly 11%. The other F&O counter which has surged, it's Fortis Healthcare. On the cash side, we've seen a lot of buying coming about because the volumes seem to be on the higher side. So do watch out for the delivery data in terms of Fortis Healthcare. This counter currently trades with gains of almost 6%.
Well, on that note, with the markets lying absolutely flat, let's try and get your very special market voice. Vibhav Kapoor, Group Chief Investment Officer at IL&FS, joins us right now on the show. Vibhav, good afternoon. Thanks so much for joining us on Bloomberg Quint. This is Neeraj here. Festive greetings to you and your team from all of us out here at Bloomberg Quint.
Good afternoon. Thank you, and the same to you and to all the viewers.
Thanks, Vibhav. Can we, if not a repeat, can we see a start of a good nature in 2018? We have an action-packed month with the earnings and the budget lined up. What are your thoughts?
I think, this Goldilocks situation, which has been there in the equity markets globally, looks like continuing for some more time, which is characterized by low inflation, low interest rates, and moderate growth. And I think as far as India is concerned, we are seeing early signs of a pickup in economic activity. There have been some indicators like non-oil, non-gold imports, which have gone up significantly last month. And also credit growth is beginning to pick up a little bit, I think, from about 4-5% to now about 9.5%, as per the latest figures. So these could be early signs that economic activity is set to pick up in 2018. And that would augur well for earnings growth, which the market has been looking for so long. So as far as that is concerned, I think the signals are positive and therefore should aid in more improvement in equity prices in 2018. However, there are also risks, and the risks, I think, one risk, of course, is interest rates going up. As we know, 10-year yields have already gone up by about 100 basis points from the low, and look set to go up further. Inflation is beginning to inch up, oil prices are beginning to inch up, US interest rates are beginning to inch up. So these could be headwinds for the market in 2018. And the second headwind could potentially come from politics, because we have so many state assembly elections. So the results of those could also decide what type of trend you have.
Vibhav, near term though, if indeed Q3 shows an earnings pickup, and it's difficult to pen that currently as to what it could be like, but if there is an earnings pickup that we see in Q3, does that act as a further catalyst, or do you think these all-time high levels are pricing that possibility?
A lot of it is priced in, but I think if you get significantly higher earnings growth in Q3 as per market expectations or better than market expectations, you could potentially get another 2-3% rise in the index from the current levels. I think not beyond that, because a lot of it has been priced in, as you rightly said.
You know, as the markets have remained flushed with liquidity throughout 2017, till about September quarter, most fund managers were probably buying more of the same. But over last 3 months, we have seen some amount of churn, some buying into the underperformers. What kind of strategy would you advise for 2018?
So I think if the economy does pick up, then some of the cyclical sectors will continue to do well. Also, metals will continue to do well because of the global economic growth, which is also picking up in a big way. So one should remain with the sectors. But some of the underperformers, for example, software and technology is a sector which has really underperformed in the last maybe 2-3 years. And I think that's set for some moderate gains going forward in 2018. I think some of the fundamental problems and the change in their business model, which has been necessitated because of automation, digitalization, etc. I think some of these companies are beginning to cope with that and change their whole focus and business models to suit the new technology. So I think this sector, which is really underperformed, could at least be a market performer going forward.
Okay, Vibhav, you also mentioned about the hardening of bond yields, which have been quoting above the 7%. Is there any threat to NBFCs as the cost of funds for them go higher? Since they've also risen so much in the recent past, do you expect any sort of correction going into 2018 for NBFCs?
Definitely, if yields go up and they continue to go up further from here, I think it is a threat, definite threat to NBFCs, because higher interest rates and higher bond yields particularly are not conducive to increase of spreads for the NBFCs. In fact, spreads could start to come down, they could be under pressure. And a lot of the NBFCs actually have now shifted a great deal of their funding from bank finance to bonds, and therefore their funding costs could definitely go up if yields continue to go up. So that definitely, you're right, could be one sector which could underperform if bond yields continue to move up.
And what will be your investment theme then going into 2018?
So the investment theme is definitely, as I said earlier, going to be to continuation of those sectors and stocks which are related to the economy, because I do expect some improvement in economic activity and economic growth rates. A little bit of increase in inflation could also be helpful to such sectors, and therefore cyclicals would continue to form a major part of the portfolio. But as I said, some underperforming sectors, particularly software and maybe even telecom, where a lot of consolidation is beginning to happen, would be sectors which would deserve some merit to be in your portfolio.
Vibhav, we just had a longish chat amongst other business leaders with A. Velayan of Murugappa, and amongst pockets within his businesses that he was bullish on, he seemed particularly upbeat about the prospects of insurance. I mean, they're trying to get into health as well in a big way. But my question to you is, because of the fact that the sector is now well and truly out there as a large sector, but an expensive sector too, is there merit in investing in this at the current point of time from maybe a 4-5 or a longer term perspective?
So as you rightly said, the sector is now sort of fully valued. The market has, got a lot of choices because there are quite a few companies which are listed, and I think it has found the pricing or the correct pricing for these companies. So from here onwards, it's difficult to see further re-rating of this sector. A lot of these companies are trading at 3 or 4 times embedded book value, and therefore are probably fully priced, maybe a little bit overpriced too, or richly priced. But having said that, there is definitely going to be a fair amount of growth as far as this sector is concerned over a longer time frame of 5 to 10 years, because of the usual factors, growth in population, underinsured country, and so on and so forth. And therefore, growth rates, I think, could continue to be in the region of 15 to 20%. And therefore, you could expect over a 5 to 10 year time frame a 12 to 15% improvement in prices of stocks per annum.
Okay. Initially you referred to the state elections in 2018 and the incoming budget. People are trying to kind of guess and understand what companies will actually benefit by the rural focused policies or infra focused policy of the government that is expected. What kind of expectations do you have in terms of policy changes and also budget? And is there a way really for a stock investors to kind of play it?
So I think given what has been there in the press, particularly press reports about the focus of the budget going to be on the rural economy because of the elections forthcoming elections, etc. Also the fact that the fiscal situation is tightening up a bit, and if oil prices continue to go up, that could become a little bit even more worse. The GST being new is still something where, stabilization of tax revenues might still take some more time. So given all these factors, I think it appears to me that definitely the budget is going to be focused on the rural economy. There will be a lot of incentives for the rural economy, and therefore sectors and companies related to the rural economy should benefit from this budget. And these obviously are, FMCG, for example, maybe two-wheelers, and some of the other such sectors. Apart from that, I don't think, given that this is the last full budget for this government, I don't think you are going to see some very drastic policy changes. For example, changes, for example, in the capital gains tax, I don't think that's going to happen. Or a sharp reduction in corporate taxes as some people expect, I don't think that's going to happen either. So apart from the focus on rural economy and rural areas, I don't think you're really going to see some very revolutionary changes as far as this budget is concerned.
Okay. Leave it at that, Vibhav. Many thanks for joining us today and speaking with us. Look forward to have you more often. That's the view from Vibhav Kapoor of RNFS with his thoughts really on markets and specific pockets. Just looking at what's happening in the markets currently. Aside of course, Jet Airways, which Navneet spoke about, coming out of the F&O ban and clocking in new highs today. A clutch of other names that I thought we should highlight. One of them is Reliance Communications, of course, and at 2:30 we are likely to hear something from the management. So watch out for Reliance Communications. And Navin Fluorine has had a fabulous move. Just look at that stock today. Look at what that stock did 2 or 3 days ago as well. I think on Friday's session too, Navin Fluorine was up about 5 or 6%, and in today's session about 7%. So I think a couple of very interesting days for Navin Fluorine. I can understand why Ester Industries had that big move. There's a company-specific reason, but Navin Fluorine too, last 2 or 3 days, has been doing rather okay for itself. So good going there. And then a clutch of auto component names, the likes of Jamna Auto, as well as Minda Corp, amongst others, seem to be doing okay. The question mark though is large cap IT doing okay. And let's put that spotlight on Infosys. The stock is currently trading flat, but Pradeep has some very interesting charts which he's bringing for us. And Pradeep, seems like there is some convergence that you're trying to point out.
Yeah, so it looks like this stock has been consolidating for almost a year. If you look at it, last year sometime we thought that all the positives were probably factored in, and after that the stock corrected from higher levels. But after this almost a year-long consolidation that started in October, November 2016, now it seems the stock is moving out of that range. So not only that a marginally downward sloping channel has been broken last week on the weekly charts, you can also see the 100 and 200 weekly moving averages that the stock has managed to cross, and that kind of gives us an indication that probably the stock is bottoming out, and there is rising interest in this stock. So technically speaking, although since the stock has been moving in a range, when the a breakout occurs at the higher level from such a consolidation pattern, it's likely that the stock will take a while, because again we are talking about weekly charts, so it is possible that for next few weeks the stock will consolidate at the higher end of the current range after giving a breakout, and this could give you an opportunity to accumulate. So this pattern doesn't really signal a runaway move unless there is something cooking in the market, in the company that we are not aware of. Normally one would expect the trader to follow accumulation strategy on this kind of a breakout and then patiently wait for the next leg up. So that's what the Infosys weekly chart is really telling me.
Well, that's about Infosys. Let's see if the stock has bottomed out or not. That only days to come will tell us. But for the time being, Infy is trading above the mark of 1,000. In fact, at 1,033, it's seen cuts of almost 0.5% in today's trade. What is doing well in terms of sectoral indices? You've got the Nifty Realty Index. That's your top sectoral gainer. It's up with gains of almost 1.3%. Which are the constituents then which are doing well there? DLF, that counter has had a spectacular move, so to say, in the last 3 to 4 weeks. It's up nearly 4%, trading at day's high. It's also touched its fresh 52-week high in today's trade. And also, you've got stocks like HTIL, that too is up almost 2%. Remember, this counter came out of the F&O ban, so after that, we've seen a bit of move on the upside. So HTIL up almost 2%. Even the other counters, Indiabulls Real Estate and Sobha, are the ones which are doing well. The other steel makers that we've been talking about, there is news that the prices have gone up again this month. So you've got Steel Authority, Jindal Steel. Both these stocks have registered gains of almost nearly 5%. SAIL is up almost 5.5%. It touched the mark of 90. And Jindal Steel and Power is trading with gains of almost 5%. But shifting focus then, let's also put spotlight on Jet Airways. The stock has surged for the 5th straight day today and is trading at record high levels. Neeraj is here with an insight of what the Bloomberg terminal is throwing up on the stock. Neeraj?
Lots, but actually just before I go on to what the terminal is saying, just a few factors that I borrowed from a few notes that have come out very recently. And aside of technical factors like coming out of the F&O ban, which might be impacting the stock, here are a few things. In the recent meetings, the CEO of Jet Airways has clearly outlined a cost reduction and a deleveraging path that the company is on. They are very confident and very focused on ensuring that the debt reduction plan stays in place. They are going to deploy almost all of the operating free cash flow to pare down further debt. Remember, they have reduced a bit of debt already, but they're going to ensure that the debt goes down further. Now, a lot of people had hopes or rather thoughts that Jet Airways could actually increase its market share meaningfully from that 18-19% that it has been resting at for a while. But I think they made it clear that they're going to focus on profits over market share. So any hopes of further gains in market share were dashed at almost all the recent meetings that the management has had with either the buy side or the sell side. And I think almost everybody believes that KLM and the Delta deal may improve the revenue share per available seat and kilometer, which is a term known as RASK or RASK. And almost everybody believes that this deal that they've entered into will certainly help Jet Airways improve that revenue per user, per seat, per kilometer in almost immediately. And that should also augur well for the international operations. Plus, there are a lot of rumors doing the rounds about some funds infusion that may come in as well from other airlines. I don't know where it's coming from, but hey, no smoke without fire. So maybe that is happening too. But all of this and some rumors and some technical factors like coming out of the F&O ban is leading to the stock clocking in at new highs. It's at significant valuation multiple premium compared to almost all of its peers. And even Stevens on the buy, hold and sell side as well. So if you just look at what the sell side is trying to say, not everybody is convinced that it's a great stock to buy. Not everybody is convinced it's a great stock to sell or hold for that matter as well. So it's split right down the middle. The only thing working for Jet Airways' favor is that crude has not really jumped up too meaningfully. I think a lot of people use that as a factor, including a couple of technical chartists as well. But that's not happening meaningfully. And it's seeing a fair bit of buying as well. Maybe on account, as I said, of technical factors like coming out of the F&O ban or otherwise. But it's certainly moving up on fairly high volumes as well. So, this is, of course, the volume uptick that we've seen today. So nothing too dramatic in terms of news flow. But just the fact that they are on a cost reduction drive, they are trying to reduce their dependability or depending on crude as a key factor for their costs, and they are trying to enter into new modes of agreements which may help them increase the revenue per user as well. Maybe all of that is working for Jet Airways, but certainly something's brewing aside of this, because this is the only one in a manner of speaking which has had this big move. If you compare Jet Airways to a SpiceJet and an Interglobe Aviation over the last few days, with all the other factors remaining constant, this is that one stock that has really gone up in trade over the last few days.
Well, clearly, Neeraj, it's more than doubled in 2017. It's up almost 130%. And I was just, looking at these stocks which keep going into the F&O ban or which keep coming out of the F&O ban. And most of these stocks have given you good returns, at least in the December series. Be it DLF, that's up 10% for the series. Fortis Healthcare too, that is still in the F&O ban. DLF and Fortis, both of them. And even stocks like Wockhardt, that's up almost 20% for the December series. JP Associates, IFCI, JSW Energy, that's the other counter which is doing well. In fact, that counter has touched its fresh 52-week high in today's trade. So there are a lot of stocks actually in the broader market space where a lot of action has been seen. And especially for Jet Airways, do watch out for the delivery data, especially on the cash side today. The volumes have been really high. The stock is trading with gains of almost 6%. Well, let's move ahead. Sunil Singhania of Reliance Capital is optimistic on earnings revival going into next year. However, he believes that one should not expect returns as stellar as the ones received this year. Here out a slice of the conversation he had with us on our special series, Thank God It's Friday.
We are quite optimistic. Frankly, we've been optimistic right from 16, but we have gone wrong.
Right.
I think we are reaching a situation where things are now falling in place. So 2016 end to 2017 end, we had a lot of headwinds.
Right.
Headwinds were from obviously appreciating rupee. We had demon. We had GST.
Right.
I think all those are becoming tailwinds now. So we have a stable rupee. We have the effects of demon almost gone.
Right.
We have companies and sectors coming out of GST. And if other countries in the world who have implemented GST are a reflection, then maybe it will become a tailwind rather than a headwind. We also have the support of commodities generally doing well. So, commodity stocks should report some decent earnings. Corporate banks, which were providing a lot and therefore subduing the earnings overall, should not be doing that going forward, and there can be surprises as far as earnings are concerned.
Right.
And I think even from an export front, exports suffered in 2017 for India. We are seeing a revival, and there's also a push from the government to encourage exports. So maybe some of the export sectors might, contribute towards rising earnings.
Right.
So our base case view is that FY19 we should see 16 to 18% growth as far as earnings are concerned.
All right.
Nifty 50 and Nifty 500. I've just chosen that because it's a slightly broader index. They've returned close to 30 and 36, 37% so far in 2017. And you also spoke about how the underlying factors are improving as far as 2018 is concerned. So just want to understand if you believe some of these indices could give similar or better returns next year.
Oh.
I know it's a very short-term call when it comes to mutual fund investment.
So, yes, 2017 has been a great year for Indian equities. In fact, not only for Indian equities, for global equities, So wherever you go, whether it's US, which has given 25%, or Hong Kong, which has given more than 30%, I think across markets, you have seen very, very decent returns. As I said, volatility has been low. 2018 is not going to be as great. We'll have more volatility. We are coming out with a high expectation and high base effect. Our view would be that Indian equity markets can give you double-digit returns, but to expect the returns which we got in 2017 would be something keeping your expectations too high. So I think we have to keep our expectations moderate. If we get higher returns, well and good, but we do expect mid-teen kind of returns to be the base case as far as 18 is concerned.
Based on your outlook on the markets then, we'd like to know what are the risks that these markets are not factoring in right now? It could be domestic or global.
So as I mentioned, 2017 was a fairly stable year, low volatility globally. 2018, definitely there will be more volatility. There is no doubt about it. So I think we have to be prepared about it. Also, global markets have all moved up in sync. There is always a possibility some event happens in the world, and that would also impact India. We have to be prepared about it. And I think now in India, you can't have a scenario where corporate profitability doesn't move up. So if you have a couple of more quarters where corporate profitability disappoints, then these valuations cannot sustain.
Right.
So I think these are some things which you have to take in mind. And the other thing is that once the election gets nearer, we have seen in the past that markets will get a little cautious, a little jittery, and we will see that towards the end of 2018 also.
Well, that's the view from Sunil Singhania as well, but it's 2:30 and just a quick recheck of the markets before we get in our experts on board. It's flat as flat can be for the Nifty, virtually no movement at all, but broader markets trading well as we described earlier. Good time to get in our technical experts on board to try and figure out what are they doing or what are they recommending to their clients, both on the indices as well as on specific stocks. Starting off with Amit Shah, technical analyst at BOBCAPS. BOBCAPS joins us right now on the show. Amit, good having you. Thanks much for joining in. What are your thoughts? Virtually no moves on the index, but is there a trade there, either the Nifty or the Bank Nifty?
Yeah, so if you see purely on the Nifty side, I think it's consolidating at the higher band. And if you see since the start of the morning, put writers have been quite active at 10,500 strike. Though there is not much of an unwinding happening at 10,500 call option, but somewhere from last 4 days, the put writers have been quite active at the money strike prices. So this gives me a sense that market is poised for a good move. Right now it is taking its time. Maybe on the downside 400, 450 would be a good support area ahead of the expiry, and once it starts hovering above 520, I think it's poised for another 80 to 70 points up move ahead of the expiry.
Any strategy for the expiry week, Amit?
I'm bullish on Apollo Tyres. It's purely a technical based idea where it has formed an inverse head and shoulder pattern, taking support around 240, 230 on a broader scale, and which is the neckline level for Apollo Tyres. The more it sustains at these levels, I think the stock can see a very good momentum. The stock has been in action since morning, and over last 1 week, we have seen a good amount of open interest activity as well. Once it starts hovering about 270 levels, I think the stock can head towards 285, 290 levels on the upside.
So this is for the expiry, but
Yes.
will you enter into it today?
Yes, I would definitely enter.
Okay. Anything else? Not necessarily expiry, could be a BTST, could be an STBT.
I like Arvind Limited. Now, if you see the stock, it had tested 400, 410 on the downside, quickly recovered, and now again back to the breakout level of 450 odd. The stock has been quite persistent throughout, if you see from last couple of weeks. And right now it has been consolidating quite strongly around 450, 455 odd band, which is its all-time high level. The risk reward from here is very much attractive, and this can definitely be played as a BTST and even from an expiry point of view. On the downside, 245, 240 would be the key support, and on the upside, above 258, the stock can head towards 275, 280 levels.
Neeraj was discussing Jet Airways in detail
Yeah.
a couple of minutes back. How do you really look at this chart? Is it your preferred bet in this sector compared to Spice and Indigo?
Well, if you see right now, the move had been quite fast. Earlier the stock was in ban. Right now all of a sudden the stock is out of the ban, and the stock is already up by 6.5%. So from here, definitely the risk reward is not at all attractive. I would rather wait for some dip towards 790, 785 odd levels to consider to re-enter the position. So at this point of time, I would avoid. And someone who is holding this counter can, of course, trail the stop loss to higher levels around 790, 785 levels.
Another high beta group of stocks, I'll say, ADAG group, They've been moving up since last week. Any stock where you see a tradable pattern that you would like to recommend? Maybe Reliance Capital or Infra?
So out of the entire lot, the only comfort which I feel is Reliance Capital. The stock has made a double bottom formation around 405, and if you see the wave on the downside, it has completed 2 legs of down move, which was from 770, 780 odd levels to almost 400. So even from a risk reward perspective, Reliance Capital I think will be a better gain and can be a better play from here on. One can trade with 475 as a stop loss, and on the upside can look for 550, 570 levels.
Okay, just watch out. Anil Ambani is just coming into address. I think this will be the big story. Reliance Communication, as we speak, is up about 17% at 19 rupees. So, you know, if you indeed were brave enough, depending on what you consider as good bravery, and bought into Arcom at 10 rupees, you made 90% on that investment. But it's stuff that traders can do very well. I think difficult for investors. Okay, he's speaking. Let's cut across.
For this announcement. With the blessings of my father from heaven, blessings of my mother Kokila Bain, the support of my wife Tina, who is here today, and both my sons Anmol and Anshul. I'm really pleased and happy to announce today that we achieved the full resolution for Reliance Communications. The resolution involves Reliance Communications exiting from the strategic debt restructuring framework, number one. Number two, it involves no conversion of any equity to lenders, fully protecting all shareholders. And number three, and most important, is zero write-off to all lenders. Clearly and truly, this is historical for any group, any company, and in the corporate history of India, I believe this will be a showcase for the rest of the corporate sector to follow. I will go through a brief presentation. As most of you are familiar, we've had what I call very mildly headwinds in the last few months in terms of petitions in the NCLT. We've had both secured and unsecured lenders going to the NCLT. The hyper-competitive landscape in the wireless sector clearly has shrunk the total opportunity size and set for the number of players in the wireless sector. And very importantly is, how do you really manage over 35 different global and Indian banks to come on the same page, all in different time zones, in different geographies, and how do you make them really converge to one direction is what I call as a challenge. What are the actions that we took? Clearly, as announced in October, the major stress in the telecom sector was in the wireless business. So we rationalized our wireless business effective November. 2 is we completed the long-standing merger with SSTL, gaining very precious platinum spectrum for 4G and for 5G, which is valid for more than 16 years. It's been a long process, and I would say that it's a showcase to figure out the unease of doing business in India. If something can take years together, it's a good way for us to learn of what needs to really change. Post that, we launched a transparent and competitive process to monetize assets which were part of our wireless business. We ran a process supervised by the Joint Lenders Forum of banks. So having 35 different banks in one room and managing them was a challenge. In order to ensure zero conflict of interest between lenders and other stakeholders, we formed an independent oversight committee to evaluate the bids, to run a very transparent process, and that's what we did. And as a part of this was, as announced, the strategic transformation of RCOM to a globally competitive enterprise company on a business-to-business basis between outside India and in India, and ensure that it is on a very strong footing for capturing future growth and future value creation. So the monetization plan had the following key components. One was asset monetization, which was to do with the wireless business. Second one was the 125 acres of land that we have in DAKC, which is the Dhirubhai Ambani Knowledge City campus. And then is the new RCOM of what it will really be and how will it be on a strong footing. So the asset monetization process involved 5 modules, which is all related to wireless. The spectrum portfolio of 850, 900, 1800 and 2100. The tower portfolio of over 40,000 towers across India. The fiber portfolio, both intercircle and intracircle, one of the largest fiber assets that anybody has in India. The mobile switching nodes, which is over 5 million square feet of space across India, which is like a mini data center, a meeting room to connect calls, and real estate, which has nothing to do with the Dhirubhai Ambani Knowledge City. And we ran a process in the following steps: the teasers, the receipts of the EOI, the signing of NDAs, the circulation of IMs, the receipt of non-binding offers, followed by shortlisting of bidders, due diligence, and signing of binding docs. The process was run by an oversight committee, high-powered bid evaluation, chaired by Mr. Mundra, ex-Deputy Governor of the Reserve Bank of India, assisted by 2 other independent members, the ex-retired member legal of the TRAI and the ex-retired member technical of the TRAI. So the group had the expertise, both technical, legal, with the telecom domain expertise, and then of course the wisdom of Mr. Mundra's expertise, both by being in a commercial bank and then being a regulator on top at the Reserve Bank of India, and who was intricately involved with S4A, SDR, CDR, and all those guidelines. As I stand here today, we have completed the process in a record 40 working days. And it was a tough one for us to do. And what was the outcome of this? We had over 75 expressions of interest with 15 non-binding offers. The definitive docs are at an advanced stage of negotiation. Reliance Communication debt will reduce by 25,000 crores through prepayment and transfer of DOT spectrum installments. As most of you are aware that if spectrum is sold, the DOT liabilities for deferred spectrum liabilities goes with the spectrum. The entire monetization process is to be solely used to prepay the debt of the lenders. All the final binding bids have already been received by the lenders, and we expect full and financial closure of all the transactions for all the modules that we are running to be completed between January and March 2018, which is the next 3 months. As far as the Dhirubhai Ambani Knowledge City is concerned in Navi Mumbai, we have, based on existing regulations, an ability to develop 20 million square feet of space. It's 125 acres. We ran a selection for a developer, again independent by JLL, appointed by the lenders, etc. We had a third-party valuation of the gross proceeds by HDFC Realty at 25,000 crores. And this real estate company, SPV, will have long-term debt financing of 10,000 crores on a non-recourse basis. So it will be only recourse to the real estate assets that are there in this SPV. It has no other recourse to RCOM or anything else at all. So we ran this process the same way. We had 57 potential partners who approached us. Interested parties were 15, site visits were of 14, and final binding offers were received from 5 different bidders. RCOM. What is the new RCOM going to look like? Which is the existing listed company, Reliance Communications, with SDR exit, with no equity conversion by banks. The shareholding remains what it is today. As I said, it is going to be transformed to a B2B business. So we have the global subsea cable business. We have the 4G sharing with Jio to offer any form of wireless solutions to our enterprise customers. We have the largest portfolio of data centers in India. We have the Indian enterprise business, and we have the international long distance business. 90% of this business is annuity. So there is predictability of cash flow. This is a business to business business. 50% of the revenues of the new Reliance Communications comes from outside India. So that's a dollar income stream. So we have access then to low cost dollars to have very competitive financing. 50% comes from within India, and that's the real split for that. As I've said here, that nearly 60% of the EBITDA is in US dollars. So in summary, Reliance Communication will be focused on the B2B space. We have sustainable cash flows with over 60% EBITDA margins. Reliance Communication, as a part of this process, has received interest from global strategics to infuse equity, further equity into the company, which will further reduce our debt. We expect that the overall debt for Reliance Communication will be below 6,000 crores, which is a huge reduction in the overall debt is one, but very conservatively structured in this space considering the annuity cash flows, considering the ability to monetize receivables from enterprise customers. The global strategics who participated in the process, a process run by Credit Suisse, have indicated enterprise values for the new ARCOM at 15,000 crores. So we will have a large equity slug coming in from global strategics into the new ARCOM, and that will go down to further reduce debt. This is what I covered earlier in terms of the Credit Suisse process. 61 strategics were approached, EOIs were 27, the IM circulators were 14, and non-binding offers have been received from 9. We will take it to the next stage. We have enough time to do that, and hopefully we will have a selected strategic partner come in Reliance Communications to further reduce the overall debt. So in conclusion, Reliance Communications debt as of 30th October was 45,000 crores. Reliance Communications debt post complete execution of monetization plan will fall to just 6,000 crores. So from 45,000 crores to 6,000 crores. Reduction of over 25,000 crores of debt and deferred spectrum liabilities from our asset monetization program. 10,000 crores of non-recourse long-term financing for the SPV that will have the real estate, and ARCOM's residual debt of only 6,000 crores. So the final outcome of this entire exercise is exiting SDR, zero equity conversion for lenders and bondholders, zero write-off to lenders and bondholders, largest debt reduction in the history of corporate India, over 39,000 crores, and the only company of our scale and magnitude to use the standstill period to find solutions and not pass on the baton to lenders to go and fend for themselves, and full resolution. And in the SDR category, as it's in the public domain, there are 40 cases out there. This is the first case that actually has used the provisions of SDR and is now exiting. As we complete all the formalities, will exit SDR. Indian banks' telecom exposure goes down by 21,000 crores. As you know that the Reserve Bank of India had issued a new circular of, basically it was like a cautionary to not lend more to telecom. So one is to get a prepayment, second one is to have no write-off, third one is to have no equity conversion, and fourth one is to really go down in your telecom exposure. So that's what you really achieved from this. Who are all the Indian lenders who will benefit? I just thought that I'll give you a snapshot of people. Hope all of them will be happy bankers and happy lenders to the rest of the Reliance Group and to the rest of corporate India, because now they have to not think about write-offs and they don't have to think about equity conversions. These are our foreign lenders who are all involved. I've just landed this morning at 4 a.m. from Beijing, and this is a photograph of yesterday at 7 p.m. In Beijing on the resolution with the Chinese banks, which is part of the entire process. China Development Bank is our largest relationship bank, and we have now a full resolution with the foreign lenders. Bondholders, and usually most people have taken the approach that if ARCOM bonds are quoting at 39 cents on the dollar and GCX bonds are trading at 86 cents on the dollar, they should take a write-off. We put them on par with all secured lenders. So they will get the prepayment and they will get their full redemption value. So you should expect a huge rally in these bonds because now there is no risk for them to lose their entire principal. There is no conversion risk. For that matter, there is a prepayment of maybe half of their amount, and the balance will be secured and will be paid in par with all of the lenders going forward. These all are our unsecured creditors, and we have a full resolution plan where we are engaged with all the unsecured creditors, and we expect a resolution over the next few weeks. Some of them are global, so they are on holidays at the end of December, but we are already engaged with them. So we expect in the next few weeks, all the unsecured creditors also will be resolved. So there will be a full resolution for them, and they will be well taken care of. These are all our customers. And these are the customers that we will continue to serve both globally and in India. And we value whether it's an Amazon or Facebook or Google or Vodafone or Verizon or State Bank of India or Bombay Stock Exchange. And that's going to be the new business of Arcom, which is primarily a business-to-business company. We are providing and will continue to provide world-class services, including the cloud, the managed services, etc., and go up the value chain in our enterprise businesses. So I want to end on the theme of what my late father said, that if you can dream it, you can do it. When we made these proposals, when we've had these discussions with the banks, we've had these discussions and presentations to all our well-wishers in the media. What my father taught me in terms of if you can dream it, you can do it, was usually interpreted by all my well-wishers in the media and the corporate sector as a nightmare and not a dream. I'm happy to say that it's been a good dream, a terrific outcome for all stakeholders. And I am really grateful and thankful to all my colleagues at Reliance Communications, the rest of the group, the entire lender group, who've had lots of challenges, lots of difficulties. And we've tried to work as closely with them to work on a single dimensional approach to resolve issues and to move forward in a time-bound fashion. I'm sure that the 1.5 million shareholders of Reliance Communications will be delighted with this outcome. We believe that long-term value will be created for all of them, and they have crossed all the risks that have been encountered by the company in these last year or so. And I'm really happy, and I should say very, very proud that we've been able to achieve this in spite of a lot of challenges and a lot of difficulties. But it's been really a very unique learning experience for me and the rest of the team. I had no clue of what an NCLT process was, what was an IBC process, what was SDR, what is S4A. I had absolutely no clue. I think that I can't claim to be a subject matter expert on any of these issues, but I think I have a reasonable insight into some of these issues, and I hope as a group and as Reliance Communication, we never ever have to ever understand, appreciate, analyze, or face an IBC, an NCLT, a SDR, or any such process ever. I think that, as I mentioned in my earlier presentations, this is a crisis of the wireless telecom sector. and it has engulfed many, many people and many, many companies. If it is the mighty house of the Tatas who had to gift their business, then very little is to be said about other corporate groups. The writing was on the wall. You really need, I would say, a pipeline into the Reserve Bank of India's printing press if you want to be in the wireless business, because it is a guzzler of currency every minute, every hour, and every single day. Thank you so much. There's only 4 of you. I will start with the print guys first.
Sir, congratulations. My name is Dev Chatterjee from Business Standard. So where do you see Reliance Communications going forward now? And also if you can just give a group overview. So what will happen to ADAG group and where do you see the next phase of growth coming from? Thank you very much.
Dave, do not deny me the opportunity of meeting you again to talk about the rest of the group. So I will stick to Reliance Communications. As I have said earlier that Reliance Communications will be one of the strongest enterprise companies in India. We will have the lowest level of debt. It's a capital light business. Our capex cannot exceed a few hundred crores a year, and it is a high margin business, as I have shown to you. And I think that shareholders will be very well rewarded in the coming quarters. I'll go here. Go ahead.
What is the status of the NCLT proceedings, insolvency proceedings at the NCLT?
I think that either you were asleep or you were not present in my presentation. When we speak about a complete resolution, that means no matters survive on closure.
Right, which is a complete settlement.
के जो शेयर होल्डर है उनको आप एक क्या मैसेज देंगे, क्योंकि वो काफी ज्यादा चिंतित थे, तो उनके लिए एक तरह का क्या संदेश होगा?
ये आपने हिंदी में सवाल पूछा है तो आपको हिंदी में उत्तर देंगे। आपने ये सवाल अपने मन से बनाया है, कोई शेयर होल्डर को कोई तकलीफ है नहीं, और आगे की जो बिजनेस है और जो प्रॉस्पेक्ट्स है वो बहुत अच्छे हैं, और रिलायंस कम्युनिकेशन के जो शेयर होल्डर्स हैं उनका भविष्य बहुत ही अच्छा है और बहुत ही अच्छा रहेगा। अश्विन। Let me start with the last first. When we speak, Ashwin, about a full resolution, it's a full resolution. You can't be in an NCLT petition and have a resolution. Nobody will do it, neither they nor us. Two is, as far as the monetization is concerned, or the terms and conditions on which the banks were comfortable, was really based on the fact that A, they don't have to convert any debt to equity and then go through the pain in 20 other companies where they have converted and there are no buyers. And the SDR process is such that after that 1 year after conversion, if you have not exited SDR or not been able to sell to the strategic, then the companies necessarily have to go to bankruptcy. So the banks are going to have a huge challenge on their hands, where if the SDRs have actually failed, they will land up in bankruptcy. So I think that we just preempted the whole prospect of conversion and of SDR. I think the driving force for the banks was A, no write-off, 2, substantial amount of prepayment, 3, practically reducing their exposure in the telecom business to near zero, the wireless business to absolutely zero. So that was the comforting factor, and we aligned all the lenders together to get it done. As I've been through my presentation, that in the packages that we've got for the wireless business in terms of the monetization, there are a large number of bidders. So I don't want to preempt by saying it's going in direction A or B or C. As I've said in my presentation, that binding bids have been received from multiple companies. So I think it'll be premature for me to say it's A or B or C. We have a large portfolio. So there is 900 spectrum, there is 1800 spectrum, there is 2100 spectrum, there is 850 spectrum, there's towers, there's fiber, so it's not as easy as going into a food store to buy something. It's not as easy as that. I think that since the binding bids have come, I think let the independent evaluation committee go through their process and they'll complete their formalities. I think that the idea of the independent oversight committee was to really make sure that a fair process, a transparent process is run, which maximizes the value for the lenders. Okay? If it maximizes the value of the lenders and we have the maximum debt reduction, please understand it also maximizes the value for the shareholders. So it is, but the first is the lenders come first. And I think that's the way we looked at it. So I think that I would say that the lenders across the board, and I've interacted with every CEO of every bank that matters, was completely convinced that the leadership at RCom is here committed to resolve the issue. And nothing else works more than that. I come back to you. I come back to you.
Nisha from CNBC.
I need to have dinner with my brother also, so
yes.
Better take care of CNBC.
So Mr. Ambani, we had reported some time back that the bid process is on, and we had stated that Bharti Airtel, Reliance Jio, as well as Idea Vodafone are some of the key contenders, and the bid process will happen in a piecemeal manner, which is akin to a liquidation process kind of a thing, where piecemeal assets could be sold. If you could throw more light on which are the bidders at this point. Of course, there could be a front runner emerging later, and is it going to be part sale of assets, and there could be multiple winners of your various assets?
Sure. I think that your question has all the answers in it itself. First, this is not a liquidation. This is a monetization. 2, we're running a transparent process. 3, bidders are allowed to bid for various packages. And within that, bidders can bid for different, I'm just giving the example of spectrum, they can bid for different frequencies by circle. Yes. So somebody has a gap in something else, somebody's got a gap somewhere else, he can bid in that way. I think that the evaluation committee just runs through the process to saying what maximizes value, number 1. 2, what brings certainty, because this is a cash deal. There is no financing, there is nothing. So what is certainty of execution and what maximizes value? And since this is a cash deal, there's no financing by the banks, so the banks don't have to worry about, oh, I have to finance somebody, so how do I treat him versus how do I treat somebody else? So it was we tried to keep the process very simple, and everybody was shared the same information, and everybody had to bid on the same basis. The process was just kept very, very simple, because if we ran a complicated process, it can never ever be done in 39 days. It could just take years together to continue.
One more question. Your stock is up 25% as we speak because of the announcement. Now, with the run-up, the stock has a little over 5,000 crore rupees of market cap. You just said that post the sale of these beefy assets, you will have an enterprise valuation of 15,000 crore rupees, which includes 6,000 crore rupees of debt which will be remaining. That means a market cap of about 9,000 crore rupees. Could you also elaborate for the shareholders what will be the value of the remaining Reliance Communications, which will be only in B2B segment, which could command a 9,000 crore rupees market cap, much higher than what it is right now with all these assets entailed, but of course, debt going out?
Yeah, I think that the most important aspect of any valuation, and for somebody like Kritika who's been to Wharton, is not the science of the financials, but the art of the financials. I think that all stakeholders need clarity. They need certainty. And then there is this huge approach of rumor mongering, gossip, disinformation, misinformation, etc. I think as all these ghosts disappear and people get clarity, I think the markets will discover its own value. And I think that we are not here to speculate, A or B or C price at all. I think that our approach is very simple, that if the strategics have bid at an enterprise value of 15,000 crores, they must see something about the business for the future, because they're not buying the past, they're just buying the future. So the markets are the markets, and we will leave it at that. But we are very, very well poised at our very low levels of debt, at the low capex intensity of the business, the annuity nature of the businesses, the dollar income stream. And perhaps I think one big factor is always going to be, which is what I said at my AGM, that there is very little chance of creative destruction of value that has happened in the wireless side to happen on the enterprise side. Because what will you do outside India? What will you do with a data center? How are you going to come and destroy it? And how many things will you give free? How many things will you give triple talk time? How many handsets will you give free? Because that's not the case. And then it's a dog-eat-dog approach. I do something and then the competition reacts to that. So we don't have to worry about any of these things. Also, I think that the industry structure is very important. So the industry structure on the enterprise business is a few players. Either they're dominated by geography or they're dominated by the sector in which they operate. So in IDC, we have 4 or 5 players. In the global submarine cable business, we don't have 100 players. So I think industry structure is an important driver to profitability and to sustainability of profit. So it's not something that has to be just put on the side. Go ahead. Sure. Sure. I think that as far as what each bank will get, whether Indian or foreign, will be reflected in their stock price tomorrow. So I don't want to comment on that. As far as the capex is concerned for the new Reliance Communication, as I said, it's a capital light approach. Most of the business in the enterprise space is done on a pre-sale basis. But as I said, the capex, depending on the growth trajectory, could be between $50 and $100 billion a year. So it's neither here nor there.
Somebody?
Please. I think that, let me take your question and speak about the industry landscape and policy drivers for that. I don't think that we can blame policy alone. I think that we also have to realize the technology evolution, the very large capital expenditure that is required on a daily basis. A new village, a new school, a new college, a new hospital, a new shopping mall means more network, more towers, more fiber, more this, more that, etc., etc. So you are on a perpetual treadmill. CapEx never ever stops. It's every day. And you've got to be really geared in terms of your balance sheet, in your cash flows, in your financial structure to do that. Clearly, as you've seen the shrinking of the mobile landscape, it's a clear signal that this is something which is not for 10 players to enjoy. This is more for 2, 3, 4 players to enjoy.
Okay, we'll of course get back to this conversation if there is something otherwise comes about, but I think the most important points have been highlighted by Anil Ambani. I just want one clarity is required from my end, and maybe my co-anchors or Sajid will be able to throw some light there. But I think he's made it very clear that the resultant Reliance Communication will essentially be a B2B business with the global subsea cable business, the 4G sharing with Reliance Jio, data centers, and the international long distance business. These are the 4 key businesses that RCom will be left with. And in effect, almost all the spectrum and the other assets get sold out, and the debt comes down from, as per what he said, from 45,000 crores to 6,000 crores. That's essentially the sum and substance of this deal. The clarity that I require is on the EV that he spoke about, 15,000 crores, whether this is the post-equity infusion EV that he's talking about or the pre-equity infusion EV he's talking about, because the stock price would be dependent a lot on that. And again, it's an assumption that he's making, and it's based on the bids that he's received. So you would presume that the people who are making the bids have valued the business accordingly and have placed the bids. So we'll get to know more about that in a bit. Hopefully some clarity emerges on that.
So actually what we don't know is at what price will the new bidder come in, right? The new equity comes in.
No, but he's mentioned that the bids, the 9 binding bids which they've received for, I don't know, as Neeraj said, it's for new Reliance Communication or not, it's about 15,000 crore, which means that he's saying 6,000 crore will be my debt.
Okay, we just need to cut back to Anil Ambani.
Okay.
Fusion, how many binding bidders are there? And also post this, do you expect all the NCLT cases to...
I think that I'll repeat myself again to saying that you can have a resolution only when you have clarity that nobody's working at cross purpose. So if somebody is in NCLT and wants to secure his debt, he can't have both. So he's got to choose which direction he wants to really go. If he believes that by going through an IBC process, he will recover more value, he should go down that path. He doesn't need my consent. He doesn't need my approval, correct? And he can go down that path. So the fact of the matter is that today we have an understanding and an arrangement with all the lenders to ensure a substantial prepayment, the residual debt to be duly addressed, correct? And a viable business model for the new RCom, with no risk to the banks of conversion, write-offs, etc. They can't have a better solution.
So are you relying for this prepayment entirely on your asset monetization plan, or is the equity infusion also part of this?
No, the entire prepayment is based only on asset monetization.
And so just a follow-up, how much would that be, the prepayment? Is there some idea on that?
We put the numbers down there. So.
No, the entire thing would go into the lenders?
All the asset monetization proceeds will go only for 100% prepayment. There's no other use at all of that.
Thank you.
Go ahead.
Good afternoon, sir. Looking ahead, how do you see RCom getting new business without having the ability to spend much on capex? And even if the deals are pre-sale deals, how do you expect to get business now?
It's the same business model that we've done over the 10 years to build the largest enterprise business in India. So we think that we will go up the value chain. As I said, we are already a leader in cloud, in data centers, in class 5, class 6, and will continue to go up the managed services business. And that's why if you see every marquee customer that exists in the world is our customer today, and will continue down that path.
So talking about equity infusion from global partners, what sum of money could be coming in and what stake could they be acquiring? Some light on that, please.
I think that we are open-minded in terms of the stake. I think that our driving force is that the company should be conservatively leveraged, or the total amount of debt that should be there, and that's the only driving force we have. At the financial level, at the strategic level, it's more to think about what other businesses he can bring to us from other geographies. Are there other synergies that we can put onto the table for our customers? Can we have a single view to a global customer? Those will be the other driving forces. But value is first, and the synergies will be second.
So, but be a majority stake or minority stake? At least that much, if you could clarify.
No, I don't think that there is any reason to have a majority stake at all. We're done. Anything else, Ashwin?
So I had one follow-up question to earlier questions. When it came to exiting the SDR, and both ARCOM and the lenders consortium arriving at a middle ground, which keeps both sides happy, I'm curious to ask you, was striking the deal dependent on any timeline within which banks expect the asset monetization proceeds to come in? Was it contingent on any timeline?
It was contingent only on the fact that they want a certainty of resolution. So I need certainty, whether it comes now or 3 weeks later or 4 weeks later, doesn't make too much of a difference. We've tried to put everything to be 31st March 2018. As you can see, it's the financial year for everybody. Everybody is concerned about it, so we look at it. And I think that when I look at, all my great friends in the media who track us every moment, missed a very big meeting. We had 80 CEOs of banks in a room, okay, and you all could not get even one comment from anybody. I gave Ashwin 2 stories there, which I'll repeat here because it doesn't concern any of the banks, no specific bank. So one is I took my elder son Anmol, who's here, who's the executive director of Reliance Capital, who has nothing much to do with ARCOM, happily for him. And he was sitting next to me, and I introduced him. And so one of the CEOs said, why is he here? And I said, he's here because I have a story to tell you. I said, in the middle 90s, at Reliance Industries, we raised a 100-year bond. It's been the first and last bond in the history of India. And it's true of the 50-year and the 30-year and the 20-year. So nobody's been able to change any of that. And I said, I remember, we got the whole group of investors to come to India, and I took them to Hazira to see the plant and saying, we physically have a plant, so it's not that you lend money to something that doesn't exist. And I had Anmol sitting next to me as a 5-year-old kid sitting there. And so I made my presentation, and at the end, one of the investors got up and said, who is he? So I said, he's my son. What's he doing here? So I said, I brought him along because who do you think is going to repay this bond? It's 100-year maturity, so I ain't going to be around. So this guy is going to do it. So quickly, he got up, came and whispered into my ear saying, but Dad, this is our money, correct? So where is the question of giving it back? So I took him for that particular purpose.
This is interesting, but the equity markets beckon as well. And ARCOM is a stock in focus, and we'll talk about that. But look at what the markets are doing too, up about 0.5%. So a bit of a pullback and a pull up, and closing in at fresh highs for ourselves. Now we'll do a whole ARCOM reaction at about 3:30. But just before we do that, and before we do the whole jig, just a quick thought from our experts who've been waiting by patiently with us as well. We'll ask Ruchit about the markets, but a quick thought from Sharmila Joshi, who is also on the show with us. Sharmila, thanks for being patient with us. Quick thoughts really on Arcom. Would you go out and be a brave heart and think of maybe investing fresh money here?
I mean, everything that I've heard so far obviously sounds extremely positive because, you're talking of a debt of 45,000 coming down to 6,000 and market always discounts things in advance. So I think that process has already begun, because the stock, even as you all were speaking, has been running up from, was up 14% and is now at 22 rupees. So, up another 3-4 rupees from there. So yes, I think there is an upside, but perhaps it would be good to now just let it cool off a little bit before you really thought of investing. And I think it has sort of added a fillip to the entire sector, because I think, even Airtel, etc. has been buzzing. So obviously, I think if everything that we're hearing today is true, there's definitely more upside on the cards.
Ruchit Jain is with us. Ruchit, we'll make some quick calls here because there are a bunch of stocks flying around. Arcom, Bharti, both of them. Then we'll come to the Nifty as well. But Arcom and Bharti, any trades here?
If we see the daily charts, then Arcom after this recent move has quite close to its 200-day moving average, which technically usually acts as a long-term resistance. So 24 would be the crucial level to watch out in this stock. I think if any traders who have bought it at lower levels in this recent downfall, then they can look to book profits if it's from a trading perspective. As far as Bharti is concerned, the broader trend for Bharti it still continues to be positive. We have seen recently high top, high bottom structure, and if we see the weekly charts, then definitely the charts of Bharti are much stronger than any other name in this sector. So I think yes, on the higher side, there is a possibility of 560 to 580 near term. So the long positions with Bharti Airtel should be continued. Even if you want to buy fresh at current levels, that could be bought with a stop loss below 515 for target around 560 and 580.
Ruchit, quickly a call on the index, which is now trading at its fresh lifetime highs. It's going to be fresh all-time high closing for Nifty at 10,538. What would you do?
So definitely today's closing is much encouraging, because last 3 trading sessions we saw that in spite of market trading near its all-time high, the trading ranges were very small, and the mid-cap space has participated very well. Now this continuation of the up move definitely indicates that the channel which we had gone through for a period of 1.5 months, and the target projections of the channel which were coming around 10,650 to 10,700 could be seen very soon. So I think yes, one need to be long in the markets, even on the index front, for target around 10,650 to 10,700.
Okay, so that's the call coming in here. Ruchit, by the way, any other ADAG group stock that you like at this point of time?
Frankly, if we see the volatility has been quite huge in this space in the recent past, and the only name which I think that I would go and buy even at current levels from the ADAG space would be Reliance Capital. The only reason is that if you see the long-term charts, then the stock has still respected its long-term averages at the recent lows, and the volumes on the recent up move has definitely been good. So I think on the high side, the stock has potential to rally higher up to 590 to 600 levels if one keeps a 1.5 months perspective. So from ADAG group, if I have to go long from current level, I would advise going long on Reliance Capital with a 1 to 1.5 months perspective for target around 600.
Just a quick thought on Jet Airways. We are very close to market close, but a quick call on Jet Airways, Sharmila.
I think that, now all the positives are in the price, but obviously I think, this is a market where mid-caps and, generally there's a buzz on a lot of themes, so that upside can continue. But from a fundamental perspective, I think all the positives are now in the price.
Oh, okay. Stay on, please, both of you. We're just very close to market wrap. I'll just take 15 seconds for myself and then Navneet and Pradeep for their calls. But just look at the Nifty 50, up about 1/3%, led by Bharti Airtel. Maybe even Reliance Industries, and a bit of a spike there. It's adding to the flavor there. And to an extent, look at what's happened to Sun Pharma and Ambuja Cements. Those are a couple of other names that seem to be doing okay. But Reliance, 1.5%, guys. And that stock too is doing rather well for itself.
Well, from the mid-cap space, we've been mentioning the steel counters were pretty active today. So Steel Authority up almost 6%. That counter closed above the mark of 90 today. Since the morning session, you had stocks like Cummins Industries. This too is in the futures and options market. That is closing with gains of over 5%. The other gainers were NHPC, NMDC and DLF, which registered its fresh 52-week high in today's trade. But we've been talking about Reliance Capital. That too was up almost 7%. It may just enter the F&O ban for tomorrow's trade. And you also had stocks like Fortis Healthcare and Justile, which were active in today's session, Pradeep.
And also look at some of the late movers, TI Financials. Well, it actually ends the day at around 11 to 12% gains, but it moved up by another 3% in last hour of trade. So closing at the day's high, you look at Vakarangi that gained around 5% in last hour of trade, closing higher by around 8% now. And also look at Kalpataru Power that moved up by another 2% in last hour of trade. We saw some buying emerging in Suzlon as well towards the end of the day. IDBI Bank also moved up a bit. JSW Energy also emerging one of the winners in last minutes of trade, and GTND India. So Kalpataru is not the only one. In power space, we have GTND moving up by around 2.5% in the final hour. ABB also moved up by around 2%. So maybe there is something interesting happening in this space actually.
Okay, so that's essentially the long and short of it. But Reliance Communication ending 40% higher. That's a big move on a single day. 32% higher, sorry. Big move on a single day, and a big move even otherwise from 10 rupees to 21.50. Extremely strong move. But I think Sharmila Joshi just gave a very nice view on what to do with this stock going ahead as well. Sharmila, before we wrap up, what does this mean for telecom, if at all? They are into a capex light model, but the telecom stocks just moved up in the last few minutes of trade as well. Do you have any thoughts on the three incumbents?
Well, so honestly, I mean, what we've really seen in telecom is that now there will be only three real players to talk of. And out of that, we have a pure listing in Bharti Airtel and a sort of a proxy play via Reliance for Reliance Jio, and Vodafone is not listed. And, it's now going to become these three, really large players to watch for. And the way market is treating, Bharti Airtel, it's almost like an FMCG stock. So you're looking at it as a consumption play, with the whole thing being that how much more data can actually people really use, because obviously, all those old parameters are not something anyone talks of, in terms of ARPU, etc. So it's all going to be how much really data we consume on our phones. So I think, and this new development, of course, I think, we will see a player which has had such a huge bet get out of it, in spite of the fact that, that ASL bid didn't go the way Reliance Communications wanted it to. I think that for me, the obvious bet within the telecom space would continue to be Bharti Airtel. I mean, Reliance One is positive on anyway, but Bharti Airtel is a pure telecom.
Thanks, Sharmila, for joining us and giving us that perspective. Really appreciate you taking the time out. Ruchit, we didn't ask you for any of your calls, but anything that you would be looking to trade tomorrow?
So probably the mid-cap space is where I would bet on still, which we have been doing from last couple of weeks now. Redico is one of the stock which is in today's trading session has given a breakout from a consolidation phase, and if we see the recent history of last 2-3 months, then the stock is in an uptrend. So after a consolidation phase, a breakout indicates that the higher degree uptrend has been resumed. I would advise buying it tomorrow morning with stop loss below 274 for target around 316. And another mid-cap pick is Jindal Saw. Well, less spoken name, but if we see the positional charts, then the recent up move has been backed up with very high volumes. So this indicates that we could see a very sharp up move in the stock in near term. I would advise going long with stop loss below 124 for target around 158 in near term.
Yeah. Thanks a lot for that, Ruchit, as well, for joining in. I just want to bring up quick market stats. The turnover, and Amit might have a comment here as well. It's not really gone up dramatically from the start of the trading day until now. So if you bring up the turnover, you will see what I'm talking about. The cash market turnover, I think, was active, but the F&O turnover, just about okay.
Above average.
Just about above average.
Yeah.
So some pullback there. The cash market turnover, I thought the BSE cash market turnover on a week which is marked by holidays across the world.
Yeah, I would have expected lower turnover on the cash side, but it's pretty much on the average side, almost 30,000 crore for NSE.
Anyways, let's take a very quick break on that note, but we'll be back with more on Reliance Communications, the big stock of the day, on the other side. Stay tuned.
Are we live?